Okay. Good morning, everyone.
Morning.
Amy, you ready for the Finance Committee meeting?
No, it's program management.
Program Management, I'm sorry. All right. The 205th meeting of the Program Management Committee will begin now. Can I get a roll call?
Here we will note the members present. Do we have everybody
Except for Jim
Fall?
Yes.
Okay, thank you.
Can I get approval of the minutes from the March 31st meeting?
So moved.
Second. Engineering Department agenda item. Rich?
Good morning. Few items. Happy Cinco de Mayo, everyone. First item is the Baton City Watershed Basins project. This action appropriates funds and authorizes staff to enter into a construction contract. The work to be done on this contract consists of the construction of 4 detention basins with a combined sewer storage volume, 5 rain gardens, and approximately 4,000 feet of storm sewer varying from 12 to 60-inch in diameter. The purpose of this project is to reduce building backups and to alleviate wet weather surcharging and overland flooding in the combined sewer system within the Baton City watershed and the Bissell Point watershed. The district received 2 bids on this project. The low bid was from J.H. Barra Construction. The bid was below our project estimate, and our appropriation of $6 million is equal to the fiscal year 20 budget. There'll be a supplemental appropriation of $3 million in fiscal year 21 for a total appropriation of $9 million, which is just below our budget for the project. The district, J.H. Barra is committed to 17.1% MBE participation on the project, which meets the goal for the project. Any questions? All right, I'll hesitate a little bit behind each one in case there's a question, or feel free to interrupt. The next item is the Brookshire Sanitary Relief. This action appropriates funds and authorizes staff to enter into a construction contract. The work to be done consists of the construction of approximately 5,600 feet of sanitary sewers, 8 to 18-inch in diameter and appurtenances. The purpose of the project is to reduce building backups and to relieve overcharged sanitary sewers. The district received 3 bids on this project. The low bid was from Fred M. Luth and Sons. Our bid was above the design estimate, and our appropriation of $4 million is above the budget amount for the project. The budget, or the appropriation, $4 million does include $1 million for dewatering, which wasn't necessarily anticipated in the original budget. So that's why we're over by about $500,000. Fred M. Luth is committed to just over 17% MBE participation, which meets the goal for the project.
Hey, Rich, this is Jim Singer.
Yes.
What does dewatering mean?
During the construction, it is anticipated in the trench is that we would get groundwater that comes into the trench, which could cause the base for the pipe to be unstable. So they actually put in adjacent to the trench a dewatering system that pulls that water out and keeps the trench dry. It's actually, they put in wells adjacent to where the trench is, and that allows the pipe to be laid in the dry.
So after the project went out for bid, it was determined that you needed a dewater. Is that the idea?
Jim, it actually is included in the bid. So it happened after our budget.
I see.
Yeah.
I see. Okay.
And it is an allowance. In other words, the contractor doesn't automatically get that, because depending, sometimes certain times of the year, he may not run into that groundwater.
Got it. Thank you.
Okay. Next item is the Kapila Sanitary Relief. It appropriates funds and authorizes staff to enter into a construction contract. The work to be done consists of the construction of approximately 2,700 feet of sanitary sewers 8 to 18-inch in diameter. The purpose of this project is to reduce building backups and relieve overcharged sanitary sewers. The project will provide for the elimination of 2 constructed overflows. The district received 5 bids on this project. The low bid for the project was Fred M. Luth & Sons. The bid was below our design estimate, and our appropriation of $1.8 million, which includes $128,000 for utility relocation and other contingencies, is slightly above the budget. Fred M. Luth is committed to just over 17% MBE participation, which meets the goal for the project. The next item is the Carson Villa Rosary Lane and Thurston I&I reduction project. This action appropriates funds and authorizes staff to enter into a construction contract. The work to be done consists of construction of approximately 3,300 feet of storm sewer, 12 to 30 inch in diameter, the removal of private inflow sources from 71 properties. The purpose of the project is reduce inflow and infiltration in the Maline and Watkins Creek watershed, reduce building backups, and relieve overcharged sanitary sewers. This project will provide for the elimination of 1 constructed sanitary sewer overflow. The district received 5 bids on this project. The low bid was from Wbe Farms Incorporated. The bid was below our design estimate, and our appropriation of $2.45 million with contingencies is below our budget for the project. Wbe Farms is committed to 17.1% African-American MBE participation, which meets our 17% goal for the project. The next item is the Deer Creek Tunnel Pump Station project. This action appropriates funds and authorizes staff to enter into a construction contract. The work to be done consists of the construction of a pump station at the downstream end, storage tunnel, the Deer Creek storage tunnel currently under construction, and all associated structures with that, and additional site improvements. The site improvements include utilities, paving, fencing, landscaping, the Carr Street lane improvements. As part of the project, both the tunnel project and the pump station project, we're using a public street to access that. And when all the work's done for those 2 projects, we'll be doing some work on that street. And this is the construction of the 2nd phase of the multi-phase improvement project. The purpose of the project is to provide additional storage during wet weather events by allowing surcharge sewers in the Deer Creek watershed discharged to the proposed tunnel. This will provide for the elimination of 12 constructed overflows when we complete the construction of the DC2 and DC3 sanitary relief project. The district received 3 bids for this project. The low bid was from KCI Construction Company. The low bid was below our designer's estimate. There'll be a total appropriation of $30 million, which is below our budget of $33.2 million. There'll be the initial appropriation of $15 million this year, and there'll be another $15 million in fiscal year 21. This project is being funded with utilization of low interest loan from the state SRF fund. Plus, we're also using funds from WFIA loan through the federal government and through the EPA. With the loans comes a MBE and WB requirement of 10% for each. KCI has met that 10% each with a total of 23.89% M and WBE participation for the project. The next project is the Vance Road Pump Station upgrade. This action appropriates funds and authorizes staff to enter into a construction contract. The work to be done consists of the construction of upgrades of electrical, mechanical, and control systems to rehabilitate the structure and wet well and elevate the electrical room floor to reduce the risk from flooding. The purpose of this project is to replace and rehabilitate an aging station and prevent it from future floods. This station's actually located along the Merrimack River and Valley Park and been flooded numerous times, so we're taking some actions to reduce that plumbing and to replace some of the work that's happened there. The district on this particular project, we only received one bid on this project. The bid was received from KCI Construction Company. The bid was slightly above our design estimate, and our appropriation of $4.5 million is above the budget for the project. We did do a little looking around, talk to other contractors, determine why we only got one bid. Unfortunately, it was being bid the same time we bid the other major pump station that I just covered, the Deer Creek. So some of our contractors had an interest in both, and they made a choice. And that's why we feel like we only got one bid on this project. Another reason was, in talking with the contractors, most of the work that's being done here is being subbed out to different electrical, mechanical. So there's less work to do for our prime contractor, and sometimes they're not interested unless they're going to be doing majority of the work. So, so basically, there's a lot. In other words, acting more as a general contractor. The district, the bid, though it's slightly above our estimate, we feel like the project with the potential for flooding and the need to get this project done. In other words, we've got a lot of things we've done to the pump station just to keep it going. We want to proceed with this bid so we can get this project going.
So Rich, would if it's an electrical mechanical project, not that I understand the construction industry, but I'm surprised that either an electrical mechanical wouldn't bid it directly, but it just doesn't work that way?
In most cases, we have electrical contractor bids that do bid, but there is still general construction work on the project. We're doing some work to the structure itself, and more apt, the electrical and mechanical aren't going to want to that type of work as opposed to our generals wanting to sub out the electrical and mechanical, if that makes sense.
It's a pretty sizable project to get one bid on. So.
Yeah, I think again, I think part of it came to the fact with the Deer Creek bid going right around the same time. You basically had the same set of contractors, and then when we get those types of situations, and occasionally they'll just make a decision to put their time in on one or the other. Any other questions? All right. The next item is the Whitney Point Drive channel improvements. This action appropriates funds and authorizes staff to enter a construction contract. The work to be done consists of the construction of approximately 275 feet of natural channel, 23 feet of storm sewers, 12-inch in diameter. The purpose of the project is to alleviate high-risk structural erosion at 2210 Whitney Point Drive in the city of Clarkson Valley. The district received 3 bids on this project. The low bid was from Wbe Farms Incorporated. The bid was below our design estimate, and our appropriation of $660,000, which includes $30,000 for utility relocation, is above the budget amount. If we went above the budget here, we added some additional retaining wall that had to be put in along the creek due to site access issues. Those were not included in the original budget on the project. Wbe Farms is committed to 17.1% MBE participation on the project, which meets the goal for the project. The next item on your agenda is the Keat Properties Agreement. This authorizes staff to enter an agreement with Keat Properties LLC. This ordinance authorizes the district to enter an agreement with Keat Properties LLC. Keat is the managing developer for the Gateway Center project, currently on construction in the city of Olivet. It is at the intersection of it'd be the southwest intersection of I-170 and Olive Boulevard. The district has 2 projects located within this development that we are currently designing or constructing. And as a part of the agreement with Keat, Keat will be responsible for the design and construction of these 2 projects, and I'll give a description. Approximately 990 feet of 18-inch sewer will be built on behalf of the district. This work is coordinated with the district's 82nd Street and I-170 Sanitary Relief Project. It's a consent decree currently under construction by J.H. Barra. The estimated value of the work that will be removed, in other words, the money for this portion of the project was already appropriated. So there'll be money taken from the contract to Barra for Keat to build this portion within his development. The other project, approximately 511 lineal feet of 21-inch sanitary sewers. The work will accelerate a portion of a project called Lindley Drive Sanitary Relief. In other words, the district has that project planned for the future, and in order to not go back in and tear up a new development, he's going to design and construct that portion of the Lindley Drive within his development. It actually ties into the 82nd Street project that the district has. And the estimated value for this work is $373,000. This action right now that we're asking for doesn't appropriate any funds. The funds are actually in fiscal year 21, so we'll have to come back next fiscal year for the funds for that project. But we wanted to enter the agreement so the developer could proceed, his designer could proceed with the design, and his contractor can proceed with the construction of the 82nd Street project.
Are they local?
Pardon?
Is that a local company?
He is, drawing a blank on his name. Brad was here. I can't think of the gentleman's name. Actually,
Rich's name is.
The owner is a local St. Louis person, isn't he,
Yes.
Rich?
yes,
I can't think of his name either.
His name's Greg Yawitz.
Greg Yawitz.
So, Rich, is this the deal that you wanted from him?
Yes,
Is it?
this is what we've been talking with. It just hasn't. We were hoping to have it worked out before we bid the 82nd Street project, but because of the schedule, the district went ahead and bid the 82nd Street project in case the development didn't happen. And now we're to that point, and he's gotten to that point to where he can make it happen. And then we don't have our contractor on the site with his contractor.
And this was sort of worked out in conjunction with the city of Olivet. Was that part of it?
The city of Olivet has been involved in our discussions simply because there's some additional work on Olive Boulevard itself. That's a pretty convoluted intersection there. So yes, the city of Olivet has been involved with this. All right. The next item on the agenda is the construction management service for Lower and Middle River Repair Tunnel facilities. This appropriates planned additional funds and authorize staff to amend an existing construction management contract with Shannon and Wilson Incorporated. This ordinance authorizes the district to amend the contract with Shannon and Wilson for their annual extension based on acceptable performance to provide construction management services for all tunnel projects, included the Lower Middle River Repair improvement project. And the only current project ongoing within that particular group of tunnels is the Jefferson Barracks project. The estimated construction management program will be $70 to $80 million. This contract amendment of $1 million is below the budget with $1.8 million, which will bring the current contract value to about $12,500,000. The appropriation is $800,000 less below because of the delays in the Jefferson Barracks pump station. As you're aware, we've been having negotiations to proceed with that project. So now that we're up and going, we're appropriating the funds for our construction management contract with Shannon and Wilson. With regard to WBE participation, the original goal for, MWBE participation. The original goal for the project, or the commitment by Shannon and Wilson, was 30%. With this $1 million, 33% will go to MWBE firms, which after this appropriation, their total participation will be 39.3%. So they're well above the 30% commitment for the project.
So, Rich, this is time. I just excuse me if I've forgotten something, but we're still waiting for the report on our consultant to evaluate what to do with the tunnel.
Yeah, Jim, this is Brian Holscher. That proposal got turned down by the board at the previous board meeting. So we're proceeding with working with the contractor to continue on with the project. Okay. Well, excuse me for having forgotten that. So we're not waiting for the report from. Okay. So we're working. We won't get a report from them. We've got the report and the information from all the other entities, and as soon as they figure out how to they're getting the clearances now, and they're getting the permissions necessary and easement rights in order to fix the current site. And then at some point, Rich is going to be coming back when it's time to move forward, and he'll have to come to the board, how we're going to proceed, what the proposed funding is for the board to decide. Once we get past this particular site, Rich is going to have a proposal to move forward.
But the board voted to go with SAK on their proposal?
Well,
is that
the staff recommended we go with, and not just SAK, but I think the recommendations of about 4 or 5 different entities. The board had considered to have another entity review it, and when we put that up to the board last board meeting, that got rejected. And so we're going to move forward with the decisions we have right now, with the recommendations.
Jim, I don't recall that either.
Yeah, I don't remember that.
It was done at the board meeting.
Well, we were there. I mean,
Well, you said you were there. We couldn't see you, but it was voted on at the board meeting.
Well, we didn't have video then.
Yeah, but you hear the question answered and you hear the vote taken.
Well, I had, I didn't, unless I've had a lapse of memory, which I'm not saying can't happen, I did not know we had voted to, I thought we were moving in the direction of having the evaluation.
Well, that's a done deal now.
Well, I'm sorry, Mike. I mean, I would let it go if there weren't 2 of us that didn't realize that decision had been made.
Yeah, I don't recall that at all.
We can, this is Brian Holscher. Let us gather the vote. There was for introduction, the vote was 2-2, and therefore did not pass. We can, if you'd like, the only thing I can offer is I can have Tim just simply, can you pull the records for Jim and Amy, and we can send those to you? Would that be helpful?
Well, that's confusing. But what didn't pass? I mean,
what didn't pass was a proposal to have an agreement with an outside entity to do a separate review.
But then,
Did I vote on that, Brian?
Boy, it was 2-2.
Yeah, you read
It's
it.
been a few months ago.
We'll have to go, Trustee Fair, we'll have to go, if the vote was 2-2, I suspect it might have been the one,
I don't know if you were in attendance at the meeting or not.
Jim Paul.
But there were two choices. You wanted to use your existing, an existing consultant to evaluate it, is my recollection. And the question was whether we were going to bring in an outsider.
Yeah,
But I don't know, Brian, it's very confused now, and I think we really got to go back and look at what happened.
Okay, well, we'll give it back. I think, Jim, what we voted on, and I think what staff committed to, is we had a recommendation jointly agreed to by staff, the contractor, the geotech, and the design engineer. The board asked us to look into the possibility of having another entity do a review of the proposed plan and bring that to you for consideration.
Right.
We did,
I remember
and
that.
it failed introduction. There was, if my memory's correct, Jim, I believe you and Colonel Wilson, Trustee Wilson voted yes, and then Trustee Fall and Trustee Yates voted no, and therefore it failed introduction.
Well, so it that would be, okay, it failed on sort of a deadlock. I mean, why don't we bring it back up now that we have a full board?
So anybody who was on the prevailing side, per Robert's Rules of Orders, can decide whether or not, if they want to bring the provision back up. That would be Trustees Fall or Yates would have to decide, if I got Robert's Rules of Orders correct, Tim, I think.
Well, I mean, is a deadlock a prevailing side? That's kind of news to me.
Prevailing side is the side whose vote is how it was carried forward. Because we didn't have a majority for introduction, the prevailing side would be those who voted no for the proposition.
Wow, I've been a lawyer a long time. I've never heard that one. I mean, I don't claim to be an expert on Robert's Rules, but I don't know, Amy. What do you want to do?
Jim, what I'd suggest is there's nothing more. What I'd ask is, as another step, we can have another discussion at the next committee meeting and go through it again. There's nothing that Rich is doing right now, between now and a month from now, that would prevent us from being able to do that.
Yeah, I certainly apologize if I wasn't there. I am very interested in this and would like to be a part of any discussion. I don't want to rehash everything, but I would like to be a part of it if it wouldn't impair the schedule.
Then what we will do is we will put it on the next committee agenda, the next program management committee agenda for discussion.
So, are we doing anything irreversible if by approving this project, that if we end up voting for a motion to have the independent review, or
there's nothing. There's nothing going on. It would delay things, but there's nothing that would stop. There's nothing that's irreversible. It's being done right now. The same property rights, the same investigations, the same historical clearances. Those would all have to be gotten. The same geotech work would be done, and that's what's being done right now. And that none of that's all of that's useful, no matter how we proceed.
In which meeting do you think that deadlock vote occurred?
Jim,
the two.
Let us just simply get the record from whichever board meeting it was that we had that vote, and we'll get it out to you. We'll get it out to all the board members.
Great.
Move on, Rick.
It caught up.
Make sure Trustee. Trustee Wilson's good? No.
We're waiting for Trustee Wilson. Yeah, no. Are you ready to go? Yeah. All right, now I was letting the other folks know what the delay was. All right, final item on the program management agenda is the Deer Creek Sanitary Tunnel Pump Station. It's a supplemental appropriation to our design contractor. This appropriates additional funds and authorizes staff to amend an existing design contract with Parsons Water and Infrastructure for the Deer Creek Pump Station as part of the Watershed Consultant Service Project for this project. The Deer Creek Pump Station project is for engineering services during construction to construct a pump station on the downstream end of the storage tunnel, the Deer Creek Storage Tunnel. The work that is going to be proposed by, that is being done by Parsons is appropriation of $1 million for engineering services, which is equal to the budget. Construction phase services include the construction field surveys, review of the shop drawings and submittals from our contractor, responding to design questions during the construction, as-built surveys, and the preparation of as-built drawings. Contractor, which is Parsons Water and Infrastructure, their original MWB commitment for the project was 25%. This amendment for the engineering during construction services will have a participation of 7.2%, but even with that 7.2%, the overall participation, if you look back on the first page, is 31.9. So they're a good 6% over their MBE participation, even after this amendment. So again, it's $1 million appropriation, supplemental appropriation to Parsons Water and Infrastructure.
So is this the same concept as the prior contract, that we could still have the independent review and proceed with this contract?
This is a different project, Jim. This is the Deer Creek project.
Oh, the Deer Creek Tunnel. Got it. Sorry.
Yeah, this is our.
I'm sorry. I see that. My mistake.
No problem. That concludes the agenda.
Thank you very much, Rich. Okay, no other business. Next meeting is scheduled for Tuesday, June 2nd, 2020. Meeting adjourned.
Trustee Fair, we are going to move some things around, and we'll let you know when we're ready to start the Finance Committee.
Okay, thank you.
Whatever we got to do.
Okay. This is the 254th meeting of the Finance Committee of the Metropolitan St. Louis Sewer District. Roll call.
All right, we've still got the list of the trustees, unless, did Trustee Fall join?
No, he's not.
Okay. All right, we've got trustees present noted.
Is there a motion for approval of the minutes from March 31st?
So move.
Second?
Okay. And we have a portfolio update.
Yep, okay, I'll take it from here. The first few items will be mine, and then I'll pass it over to Marion, if that's okay. So we'll start with the portfolio update. This is the sheet we look at every month, our operating fund portfolio. I'll start in the upper left. Total par amount of the portfolio is $647.5 million. Yield to maturity, 1.59. That's down from 1.82, so that's a pretty significant decrease, and that's due to the quick drop in interest rates. You see that more on the benchmark side, where the yield to maturity on the benchmark is only 20 basis points. That's because that entire portfolio turns over every month. Ours turns over more slowly, so we follow interest rates down or up if they're going up, but just a little bit more slowly. Our weighted average maturity, which is the WAM, is shorter. That's because we need more liquidity. We need immediate liquidity to run operations. Fund summary is at the bottom. There's nothing to note there. That's just some buckets that some of the money is in. I'll move up to sector allocation. We added a category here. Typically, we don't show cash in this, just investments. However, we are holding some cash in an interest-bearing checking account that is collateralized. So we've added that piece in here. That's almost 8% of the portfolio. That's for some liquidity, and we're getting actually a little bit better rate on that than we have been in treasuries. The rest of the portfolio, the entire portfolio, is in compliance with our policies, about 20% on the treasury bonds, 56% on Fed agencies. Our commercial paper is significantly lower than it usually is, even though we only invest in the safest commercial paper, the highest rated. It's still the riskiest investment that we have. So we've been lowering our allocation to commercial paper. And then the maturity distribution is at the very bottom. The blue bars are our portfolio. You can see how we have money on the shorter end of the curve, whereas the portfolio is more kind of the middle of the curve. So that's why you see some differences always in the yield to maturity and the weighted average maturity as well. But everything is in compliance. Next month, I expect this portfolio amount to be down significantly. We have a large debt service payment due in May, as well as a pension contribution. So we'll see that that number go down next month. Any questions about the portfolio? All right, I'll move on to. I'm sorry? Okay, I'll move on to the resolution. So we've got two resolutions for financial advisory services. We have co-financial managers. It's PFM, Public Financial Management, and IPA, Independent Public Advisors. The resolution is to exercise the last contract option year for the financial advisors. They've been our financial advisors for a long time. Staff does recommend exercising the last option year, and then we do another RFP for these services next year. This is the group that helps us when we go to market for bonds. So they provide advisory services. They have a pricing desk that so they help us negotiate pricing. They help us with the marketing materials for the bonds. They've done a great job for us, so we recommend exercising the final option year for both PFM and IPA. The work, our financials are split 75% PFM, 25% IPA, which is a minority and women-owned business. Any questions about the financial advisor resolutions? All right, if not, I'll move to the next one, which is a resolution to exercise an option year for our internal auditor, Brown Smith Wallace. Brown Smith Wallace, I believe, still has another option year remaining on the contract after this one. I believe they've also done a good job for us. I do recommend approving the resolution to exercise this option year. It'll allow them to continue to provide internal audit services for us to continue on our plan. They've got a do not to exceed $280,000 contract. I should have mentioned PFM and IPA are paid per bond. So, and they're paid out of bond proceeds. So we don't have a specific budget amount for them. It depends on how much in bonds we issue, although there is a max of $250,000 a year. And for Brownsmith Wallace, it's not to exceed $280,000 contract. And they do internal audit services perform all year long. Any questions about Brownsmith Wallace? All right, and then the final item that I have before I turn it over to Marion is the pension investment policy statement. So we review this at least annually. The last time we changed this was almost 2 years ago. But this year we do have, so we've reviewed this internally. Aon has reviewed it. We've come up with some changes. Most of them are cleanup. So I want to walk through the major changes with you so we have an opportunity to discuss each one. I think the biggest one would be a change to the assumed actuarial rate of return, which is something we discussed several meetings ago and agreed upon. I'll get to it. I'll get to the
I'm sorry.
page. So I'll make sure I hit that one, but there are a few other changes I just want you to be aware of and make sure you are comfortable with. So I just want to give everybody the chance to discuss them. So I'm going to first start to the table of contents and investment policy guidelines on page 1. You'll note that there are just some cross-outs there. Domestic high-yield managers, global asset allocation managers, absolute return and hedge fund managers. These are not assets that we're currently allocated to, and so the thought is that we would remove them from the investment policy. What that'll do is when, or if we ever come back and would like to add an asset allocation to a new asset class, it would force a revision to the policy and obviously a discussion again. So we're not using these, it's taking up space in the policy, so we'd like to just remove these listings and descriptions from the policy. Please stop me if you have any questions as we go along. The next item is on page 5 at the bottom. It says a wording change. So this is item number 9 under paragraph E, which is investment managers. One of the requirements for the investment managers is to provide monthly reports to the custodian bank in a timely fashion. It used to say that that does not apply to real estate and hedge fund managers. And we'd like to change it to say this does not apply to private market investments where reporting is typically delayed relative to public market investments. It's just a little bit more of a generic description that's a catch-all. So that if we do add an asset class later, we don't accidentally forget to update this part of it and get caught in a conflict in the documents. But it does the same thing, in my opinion, because there are certain private market investments where reporting is delayed, not done as quickly as, for example, somebody who's managing a basket of stocks could do. All right, if there are no questions, I'll move on to page 8. There's a paragraph there, D, prohibited transactions. This is the same kind of change, so the recommendation is to say, and then we need to have some formatting I see we need to fix there. But the new sentence should say, except for private markets, the following transactions are prohibited. Previously, it said, except for real estate, real asset, global asset allocation, absolute return, and hedge fund strategies. So it listed all the different private markets. Here, we're just doing a catch-all private markets, a little more concise, but again, does the same thing. No immediate impact to our portfolio. But just
okay, well, Tim, you've lost me there. I don't understand that distinction. I mean, private markets. How would we know? Just take the first bullet, uncollateral derivative. Now, how would we know if that was purchased in a public or private market? So we're saying it's okay if it's purchased in a private market, but not in a public market? Does that make sense to you?
Yeah, so, well, typically when most of the funds that we have are public market funds, or public bonds, or public stocks. Exceptions would be things like real estate, or in the past we've had hedge fund strategies. We've had real asset strategies before, which would be commodities. So these kind of transactions are typical in those kind of asset classes. They are not in, the typical kind of stock and bond funds that most of our portfolio is in. So the private market would be like the ones listed here: real estate, real asset, hedge funds, private placement, private equity. If you think that's not clear, we can leave the language as it is, or I can add a definition of private markets if you think that would be helpful.
Well, I accept your explanation. I've never heard, so the investments in the bullets typically use, well, wait a minute, in private market, there are classes of investments that use these asset classes that are in the bullets in private markets, and we don't want to stop that. But there are, but we don't want. Oh, I just lost you there.
Yeah, we don't want to
We
allow
don't
these.
want people doing it in the public markets.
Right, and the idea is the funds. So maybe we can clarify better. It's not, the idea isn't to allow, for example, the BlackRock fund, which is a Russell 1000 index, to allow them to use these kind of transactions in private markets. That fund only invests in public markets. So the idea is that when we enter an asset class in which these kind of transactions are more typical, then we want to give that investment manager the flexibility, because that's why we were hiring them. But the typical public market funds that we have, like most of our current investments, would not be allowed to use these kind of transactions.
And was this change recommended by Aon?
Yes. Yeah, we can.
Okay.
If you'd like to see us, we can come back with a clarification if you think it's not clear.
Well, man, it isn't clear to me, but that doesn't, my knowledge of investments is not at that level. So if you and Aon are saying this makes sense, I accept that.
Okay. Any other questions? Okay. Thank you. On the next page 9, there is a leverage paragraph C at the top. It previously said that hedge fund managers are permitted to use derivatives to magnify overall portfolio exposure. This is mostly talking about leverage. The recommended change is to say on an exception basis. This is to correct a conflict in the document, because real estate funds do typically use some leverage, and ours does. And when we go to the real estate description, it does say that those rules are going to be documented in the agreement with that manager. So again, the point here is not to allow anybody of our managers to use leverage. It would just be to make sure that we avoid conflicts in the document and recognize which managers specifically are permitted to use leverage, which may be outside of the hedge fund world, for example, real estate. Does that make sense?
Is it setting I guess that, I'm just putting my hat on as an ERISA lawyer. You put a restriction in like that, and let's say there's a bad investment, and part of the problem was with leveraging. And then we're criticized, and well, where did you grant the exception? Did you specifically consider an exception to your general rule, and where is it in the record? What I would tell a client if I was reviewing this is you're setting the trustees up for failure, because people are going to forget about this, and it's going to be unlikely that you'll have the documentation to prove this exception.
that would be my advice if I was serving as your legal ERISA counsel.
All right, well, definitely, we're not trying to set up the trustees for failure. This was something that we, thought we would manage in the specific documents, but I do see your point. So let me discuss with Aon, and we'll see if we can come up with maybe a better recommendation there.
Okay.
Jim, this is something that you can communicate with the board prior to the board meeting for introduction, correct?
Yes.
If you're going to make an adjustment?
Yes. And I'll make sure that if we do bring this up, then next week that I note in public as well the changes that we're recommending, so you know that what we're voting on. On page 10 at the bottom, this is just getting back to the table of contents where we are striking some of the language around some of the managers that we're not using. So the global and international fixed income managers, actually, oh, that was high yield, actually. That title's wrong. So that there's high yield managers, there's global asset allocation managers that we're striking. The real estate one will actually be labeled F, so that's a cleanup item. So those are some of the items that we talked about would be struck. All right, a couple more pages. Let's move to page 16. A little bit farther. I think one more. All right, thank you. Here are some modifications. So at the very top, you see is where we put the long rate return objective of the plan. As we discussed previously, we want to move the assumed rate of return from 6.9 to 6.75. That's a bit more conservative. What it'll lead to is an increase in contributions because it'll be a lower discount on the liabilities. We discussed that a few months ago, so this is the formal action to make that happen. And then we made some tweaks to some of these allowable ranges. Again, getting rid of some of the asset classes that we're not using. And then there's not big changes to the ranges, but then we're also adding allowable ranges around the equity targets, and that's because as each of these individual asset classes move around, the total amount in either equity or fixed income moves around. But we did want to set some lower bounds there. The reason that you'd set a range there is so that you're not forced to take an action to get exactly to a target that's immediately going to be thrown off as soon as the market changes again. So it gives us some flexibility to move within those ranges. Any questions?
Is there an Aon report that matches up with this, so that if someone said, "Where'd this come from?" we could say it was recommended by Aon?
There's not a report. I mean, this is our portfolio for us. This isn't like a standard something Aon recommends to every client. Every client is going to be different with what they're trying to achieve.
But I mean, one of Aon's, I believe, I don't have their contract in front of me, obviously, but I thought we hired them to provide advice on asset allocation
So we
and
did.
the investment.
We did get an asset liability study from them, and so the actual targets, we do have something from Aon establishing those targets. The ranges are just usually, anywhere from 3 to 5 basis points above and below the target. So we do have something from Aon on the targets, yes.
Okay, I would ask that Aon, quote, bless the ranges as well. I mean, that's what we hired them for.
All right, they provided this, but we'll
Okay, well then, that's, okay, well, if they provided it, then that's good enough. I would just, like, when you write up the motion, for the regular board meeting, could you put something in there as recommended by the, investment consultant or something like that?
Yes.
Okay.
All All right, and then finally, the next page, page 17. This is a list of the performance benchmarks that we use for the fund managers. Again, most of these changes are just removing asset classes and the applicable benchmarks since we are not invested in these asset classes. There is a change. You see the Citigroup World Government Bond benchmark was changed to the FTSE World Government Bond Index. That is not an actual change in the benchmark. That is just a change in the name. I think FTSE took over or purchased that index, so now that's who provides that particular index. That's not a real change. Now the other one, the NCREIF Property Index, this is a recommended change in a benchmark. And the recommendation is to move from the property benchmark to the Odyssey index. I'm sorry, the property index to the Odyssey index. And the reason for the changes, we've been using the property index for a while, but the fund that we are in more closely tracks with the Odyssey index. It's actually in the Odyssey index, and there's a few differences. For example, the property index does not have certain property types that are in the Odyssey index, like senior housing, some student housing development. Well, we talked a little bit about leverage with real estate. Our fund uses some leverage, so do most real estate funds. However, the property index does not report any returns using leverage, so it's a little bit off there. Historically, these have tracked pretty closely, by the way. There's certain fund level expenses, like with the Odyssey, which is a group of real estate funds. There are, accounting and legal fees, that sort of thing, that are in that index, and that obviously would be in the fund that we're invested in. However, those costs are rarely pushed down all the way to the property level, so we're not in the property index. Cash is something that's held at the fund level, but not at a property level, so you're not going to capture it in the property index, but it is captured in the Odyssey index. And then there's some slight differences in property types. Other ones, I think traditionally Odyssey's had a little bit more office. Excuse me. And regional distributions, north, south, east, west, there's some little bit of differences. And then typically the properties in the Odyssey index are usually a little bit bigger. The property index captures a little bit more, and some smaller ones. So again, this isn't a huge change. They've tracked pretty well historically, although the returns on the property index have been higher lately. But again, some of that is because they're not burdened with some of the costs that the funds in the Odyssey, like our fund, are. So that's just a recommendation to put a benchmark that more closely resembles our investment. Are there any questions or concerns about that? All right, if that is fine, then I have a couple things on there to get back to you on. But then, Trustee Fair, if it's okay, I will turn the rest of this meeting over to Marion. He's got the next several items.
Sounds good.
All right, good morning. First item that I will cover is the Adjustment Review Committee report. This is required by ordinance. So in the first section of the report, you will see 34 adjustments that were made, which lowered district revenues by approximately $147,000. The bulk of that reduction was due to extra strength surcharge reductions, and what those are is our Department of Environmental Compliance regulates the strength of wastewater discharges by our industrial customers. They perform periodic reviews and make adjustments to the charges that we assess to those industries. So that reduction.
Marion, can you speak up a little bit? It's hard for me. Can you get closer to the mic?
Yeah. Can you hear me now?
Oh, it's much better.
All right,
Thank
sorry
you.
about that. As I was saying, the $148,000 that you see there for the surcharge reductions contributed to that $146,000 overall reduction in adjustments in that first section of the report. Going down to the next section, you'll see write-offs that total approximately $162,000. Those write-offs are due to properties that were sold through county and sheriff sales. The district is required to write off our wastewater adjustments, or I'm sorry, billings, whenever that type of sale takes place. So overall, during the quarter, we had a total of 53 adjustments and write-offs, which totaled $308,000. Are there any questions that I can answer regarding the report? Okay, if not, we'll move on to the next agenda item, which is a financial update. So I'll start off in the top left-hand corner of the first chart there that's listed. It's the one that's titled FY20 Budget Status Forecast. This particular chart compares the budget versus the actual results for the district debt service expenses, our operating expenses, and our capital program. The total variance for those three categories is $84 million favorable, meaning that we expect our expenditures to be less than our budget. Our debt service is projected to be $7.1 million favorable. That is due in part to the refundings that took place this year, which lowered our debt service expenses. Also, our operating expenses right now are projected to be $1.5 million favorable. And finally, our capital expenditures are projected to be $75 million favorable, of which $20 million is actually due to program savings, and the remaining $55 million is actually delayed projects. Moving over to the top right-hand corner of the chart, that's the FY20 user charge forecast. This chart reflects that our user charge revenues are projected to be $10.1 million below budget at the end of FY20. This is due to decreases in water consumption in our residential and our commercial customer classes. We are closely monitoring these revenues to determine the impact of the coronavirus on revenues for the remainder of the fiscal year. In the lower right-hand corner of the chart, you'll see a graph that depicts our average collection period. This reflects that the collection period of 55 days has been relatively flat for the remaining 5 years. Our total delinquencies have increased in FY20 by approximately $5.7 million. In the lower left-hand corner of the graph, again, this depicts the district debt service coverage, which is the ratio of available revenues to pay principal and interest on borrowed funds of the district. As the graph depicts, we are exceeding both our requirements and targets for our senior bonds and all of our debt obligations. Are there any questions that I can answer regarding this document?
This isn't really so much for Marion. Who's ever doing the tech? I want to say overall, I've been very impressed with what's shown on the screen. But for whatever reason, this graph, those graphs that Marion was reporting on, well, now it just kept flashing like a neon light. Now it's doing it again. I don't know if that's something you could work on in the future. Oh, well, that's much better. You fixed it. Thank you. Oh.
No.
That's much better.
He's pointing at John.
Yeah.
I thought I was having a migraine headache or something.
All right. We'll definitely work on that. Okay, I'm going to move on to the next agenda item, which is our FY20 budget adjustments. It is on page 31 of the PDF document. Okay, there we go. So I initially presented the preliminary FY21 budget to you, and I think it was our March committee meeting. I am here today to talk about adjustments to that budget. I will start with the FY21 revenues that you see on the left-hand side of that graph. Those were reduced by $1.3 million, our wastewater revenues were. The numbers that are depicted in red show the changes from the previous version. Overall, our district revenues have, we've adjusted those by $11.3 million. And again, $1.3 million of that is a reduction in wastewater user charges. $10 million of that actually is we're not going to have to use as much fund balance as we originally thought because our capital program expenditures have been reduced. So I'll move over to the right-hand side, which shows our total expenses. Our operating budget, we've made adjustments to it. It has actually increased by about $300,000. Our capital program, though, has been reduced by $11.6 million. So net effect of that is an $11.3 million reduction in expenditures. If you'll move on to slide 3, this shows the revisions that were made to the capital program itself. Again, overall, you'll see there a change at the bottom right-hand corner of $11.6 million. The bulk of that was wastewater construction projects that decreased from the last time I presented by about $18 million. And then we had some other various changes which net out to that $11.5 million figure. Moving on to the next slide. I want to spend a little bit of time talking to you about the remaining budget schedule. We are slated to introduce our budget during the next board meeting on May the 14th. We will have a public hearing that starts at 6 o'clock to discuss the budget as well as our proposed taxes. Chairman Yates had appointed a finding of facts committee to review our proposed taxes. It's my understanding that that committee will be chaired by Trustee Fall, who will be present here for that hearing. And it's my understanding that the other committee members that we're appointing to the finding of facts committee consist of Trustee Singer and Fair with Trustee Wilson, as an alternate. The committee will be requested after the conclusion of the public hearing to determine that the amount of taxes to be levied by the district in 2020 is appropriate. I will forward information to all the committee members and to the remaining board members this week. It will contain documents with the proposed rates for the taxes, as well as for those finding of facts committee members. You will be asked to sign a document which affirms that you concur with the level of taxes that we are charging. That will be done after the conclusion of the public hearing, but because we have some members that will be off-site, I will go ahead and mail that document to you, and if the committee concurs, I will ask that you sign that document and return it to me. We will send return addressed envelopes to you so that you can get that back. So are there any questions regarding the proposed budget adjustments? Okay, if not, I will cover 3 ordinances next. The next one will be our proposed budget ordinance. Again, this ordinance will be introduced at the May 14th board meeting. It authorizes the district to expend funds in FY21 for wastewater and stormwater operations. The requested appropriations total $342 million. And if you look at the document at the the lower section of the document. It provides a listing by fund of the requested appropriations. Those match the amount of the operating budget and the debt service amounts that I previously discussed just a moment ago within that budget adjustment slide. Again, they total $342.2 million. Okay, the next ordinance relates to our wastewater user charge ordinance. This particular ordinance enacts a new wastewater user charge rate schedule. If you'll go to the next page, you'll see Appendix 1. That lists the recommended rates that the Rate Commission recommended, which the board accepted. These rates will be used to fund the district's capital program, our operation and maintenance activities, and to pay debt service on outstanding bonds of the district. The typical residential wastewater customer that uses 6 CCFs or approximately 4,500 gallons of water will be billed $56.40 in FY21. That's an increase of about 83 cents or 1.5%. The new rates will be effective October the 1st. This is a change from our prior practice. Normally our rates go into effect July the 1st, but due to the economic conditions that some of our customers are facing, the district and the board approved delay in those rates until October. So we are set up to do that. And then finally, the last item I have, which is item 12, is the district's proposed tax ordinance. This ordinance complies with the district's charter, and it's part of our annual budgeting process. The board will be requested to approve the tax rates that are on the next page of the document, which is page 40 of the PDF. So these taxes will be requested to fund the district's stormwater program. There are also some additional OMCI taxes that appear on the document for 6 OMCI districts that staff has previously discussed with the board with respect to how those taxes will be used in those 6 sub-districts. So you'll see a total there of approximately, I can't see the document, but I think it's about $44 million. So again, we will discuss these proposed tax rates with the Finding of Facts Committee during the May 14th public hearing. Are there any questions about any of the ordinances that I can answer? Okay, if not, those are all of the items that I have on the agenda.
Thank you, Marion.
Thank you.
Trustee Fair, we don't have
Okay.
any additional items.
Yeah, right, I'm sorry. With that, the next meeting is tentatively scheduled for Tuesday, June 2nd, 2020, and motion to adjourn.
So moved.
Second.
Okay.
Trustee Fair, we'll let you know when we're ready for the Stakeholders Committee. Trustee Wilson will be the chair for that. Ready, sir.
Then I'll open the meeting of the Stakeholders Relations Committee. Ask for a roll call.
All right, well, no, we have the same trustees present. Thank you.
Thank you. There are no comments by the chair. I'd like approval of entertain a motion for approval of the committee meetings of, committee meeting minutes of the 31st of March.
So move.
Second.
Okay, the minutes are approved. I will hand this off to Ms. Meyer to take the discussion on item 4 on the agenda.
Thank you. And item 4 is a resolution for federal legislative consulting services. Brent Franzel is our federal lobbyist. He's with Cardinal Point Partners. So this resolution will authorize the renewal of the contract with Cardinal Point Partners for the first year of 4 option years. Last year, the board approved a contract with Cardinal Point Partners. It was a 1-year contract with 4 one-year options. This resolution will authorize the renewal of that first option year. Are there any questions? Okay, thank you. Number 5 is also mine, so I'll move on to that if there's no questions. Number 5 is resolutions for general legal services. I have 3 outside counsel firms. So there'll be 3 resolutions for the renewal of the first option year. Last June, the board approved a contract with Armstrong, Teasdale, Thompson, Coburn, Reinierson, Seuss, Schnurbush, and Champion, and the Hale Law Firm. I hate to report this, but early this year in January, Larry Hale passed away, so I no longer have that contract with Mr. Hale. So there will only be 3 resolutions on this month's board meeting for renewals of contracts. The first resolution.
Wait, Susan, hold on a second. Do the renewals provide for fee increases in the hourly rates?
That is agreed to initially with the initial contract, so it varies. I'll go through that with each firm, okay?
Well, I just, everything I read, the legal service industry or the law firms are having a rough time with the pandemic and are getting hammered by large clients like large clients to reduce their rates. So I suggest you take a careful look at if you're recommending increases in the hourly rate.
Okay, I'll brief that with you as I go through them. The rates that we currently have with them are conditions that are locked in with these contracts. I have not been approached by any of the firms to change the hourly rates.
Well, no lawyer's going to ask you to lower their rates. I mean, that would be an unusual lawyer. It's coming from the customer, the client. But why don't you tell us which ones provide for increased rates?
Okay, so the first resolution will authorize the renewal of a contract with Armstrong Teasdale. Like I said, the original contract was a 1-year contract with 4 one-year options. This resolution will authorize that first year of the option years. And Armstrong Teasdale agreed to keep their rates the same through the duration of the contract. So I take that back. I'm reading the asterisk. The rates are fixed for year 1 and year 2 of the contract, and they are requesting a 3% cost of living increase to be applied in years 3 through 5. So for this option year, going forward, the rates will stay the same as they provided last year.
So we'll face up to that if we want to renew it in 2022 or 2021?
Yes, that would, for FY 2022 would be the request for a 3% living increase.
Right. Okay.
Okay, so the next resolution will be for, to authorize the renewal of a contract with Rynearson, Sioux, Schnurbush, and Champion. Again, last year, the board approved a contract with Rynearson, a one-year contract with 4 one-year options. This resolution will authorize the first of those option years. Rynearson rates, they committed to will stay the same throughout the duration of the entire contract. So for last year going forward till the end of this contract, their rates will not change. The next resolution is with Thompson Coburn. It authorized the renewal of the contract for the first of 4 option years. Again, last year the board approved a contract with Thompson Coburn, a one-year contract with 4 one-year option renewal periods. The rates for Thompson Coburn will also remain the same throughout the duration of the contract. So there are no scheduled increases in the Thompson Coburn rates for the duration of the contract.
And it's the same duration. The first law firm was Armstrong Teasdale, is that right?
Correct.
Make an asterisk, you make a note to, I don't know if, obviously Thompson Coburn and Armstrong Teasdale compete with each other. I don't know, it's a legitimate question to ask Armstrong why we should be paying those 3% increases in future years, but we'll deal with that in the future.
Okay. Any other questions? Okay, those 3 resolutions will be on the board agenda for next week, and that concludes my items on the agenda.
Okay, thank you,
Thank
Ms.
you.
Meyer. Joyce,
Okay, great.
item
morning.
6.
Item 6. Yes, good morning, trustees. I'm going to be going over agenda item number 6. It's Resolution 3592 for the third-party claims administration services.
Yeah, I'm hearing music. Thank
I hear
you.
music too, but I always hear music in my head, so I just,
My apologies.
Oh,
can you hear me better now? Yeah.
that's a phone, okay.
Okay, I'll continue. The administration services we receive at MSD are for the water backups, workers' compensation, general liability, auto, errors and omission, and any other claim against the district staff, and trustees. We are asking to enter option year 2 of 4 with Thompson McGee LC in the amount of $624,000. The district has worked with Thomas McGee for over 10 years. They have provided quality service for each of these years, and we're looking forward to receiving your approval of this resolution. What questions do you have about our current services with this TPA?
Does anyone have questions?
Okay, well then,
Looks like none. Move on.
I will move forward then. The next item is agenda number item 7. Hopefully this is listed as a resolution in your packet, not an ordinance, but it is resolution number 3598. That is again, resolution number 3598. It is for employee benefit consulting services. The district leverages professional consulting services for our group medical plans, our dental, our life insurance, our accidental death and dismemberment, our legal plans that we offer for our employees, and long-term disability services. This resolution this resolution is asking to exercise the first of 3 option years with Gallagher Benefit Services for the same annual amount of $46,000. We are also pleased with this consultant. We worked with them for several years, and we are looking forward to getting your approval on that particular resolution. Is there any questions that you have about our benefit consulting services that we received from Gallagher? Okay. Moving on, trustees, I have provided you with a spreadsheet, a larger spreadsheet. The same information is in front of you, but I'm visually challenged, so I needed a larger spreadsheet to look at. Plus, it also, the larger spreadsheet that I've sent out has the most updated ordinance numbers on that. So we'll be covering the liability insurances on that spreadsheet. Trustee Fair and Trustee Singer, do you guys have that spreadsheet as well?
I got it
I
up.
have it.
Okay, great.
I've got it.
All right. Well, we cover the liability insurances here at the district. The liability insurances covers topics from auto insurance to flood to underground storage tanks. There's 19 of these different insurances that I'm going to go over. At any point in time, if you have a question, I ask that you just interrupt me, but we'll just go through the insurances and I'll be glad to answer any questions I can. So ordinance number 15403 is the insurance that covers our property and our boilers. This insurance is FM Global. It covers buildings, computer equipment, computer systems, from damages, from physical damages, and it also covers any malware damages that might happen to our software. This is for all of our locations. It covers up to $1 billion worth per occurrence on the insurance. And the annual cost for this insurance is $1,091,000. Questions about the property insurance? Now, trustees, I do need to let you know that all of the liability insurances have gone up a little bit over 5%. Part of that is just the nature of dealing with liability insurances. They do have an annual increase, but we also do have a large pending claim that is impacting that rate increase. So just overall, it's been about 5.5% increase on all of the insurances. Moving on to ordinance number 15404, that is our excess flood and earthquake insurance that is also with FM Global. This insurance covers all of our buildings and the contents owned by MSD from flood damage. This is for all of our locations, and the coverage that we have on here goes up to $30 million for flood damages. The flood portion of that insurance cost us at this time $1,085,000. And the earthquake insurance, we were able to keep the same premium as last year, and that is $156,000. Any questions on the excess flood and earthquake? Okay, moving on. Next is ordinance number 15418. Excuse me, I'm so sorry, 15412, which is the auto liability insurance. This insurance was previously with Travelers, St. Paul Travelers, and now it's with the Phoenix Insurance Company. This insurance covers any liability arising out of the ownership, use, maintenance of vehicles owned by MSD and hired vehicle liability. It covers bodily injury and property damage if MSD is found negligent while using the vehicle. Again, this is for all of our locations, and the coverage is up to $2 million per accident. The annual cost for this insurance is $245,974. The next are our combined liability insurances that we have with MoPerm. That is ordinance number 15418. This insurance on our general liability covers liabilities arising out of the existence of operations and maintenance of MSD's businesses and operations. It covers bodily injury and property damage if MSD is found negligent by a third party. It's for all of our locations. The insurance coverage covers up to $2 million per occurrence, and the annual cost of the insurance is $262,445. The next level of that combined liability insurance is also with MoPerm, and it is the same ordinance number. This is for the management and employee benefit plan administration liability. This insurance protects MSD board members and employees from any financial loss claims or lawsuits, which can result from just our everyday business decisions. It particularly covers wrongful acts, which is not a problem for MSD because we're great people, and errors and omission. It's for all of our locations. It is $2 million per occurrence, and the annual cost of that insurance is $56,845. And the last level of the combined liability insurance that we hold with MoPerm is for employment practices and liability. This insurance protects MSD board members and employees from risk from financial loss for claims and lawsuits, which can result from us doing our daily, everyday business action. This focuses particularly on lawsuits regarding employment practices. It is for all of our locations. The coverage for this is $2 million per occurrence, and the annual cost of the insurance is $161,756. Okay. Moving on, we're going to go to the ordinance number 15419. This is the public official excess liability. This insurance is covered by ACE Insurance Company. This protects our MSD board members and employees in excess of the original insurance that I just referenced. It covers additional coverage for any excess liability regarding errors and omissions. It's for all of our locations. It covers up to $2 million additional per occurrence. And this annual cost for the insurance is $87,443. Moving on to our excess liability, trustees, at this time, we are still out getting bids for the excess liability. I do not have final numbers for you. The update I can give you is that Allied, which was our insurer last year, has declined to cover us moving forward this year. And that is in part due to a large claim that we have kind of pending with them at this time. So we are looking at other insurance companies, and we are waiting right now for 7 of those companies to respond back. So you'll hear this information from me in our next committee meeting when we're getting ready to go to board. Questions at all about the excess liability that you'll hear about later on? Okay, no questions, moving on. Ordinance number 15415 is the cyber risk insurance. This insurance is being covered by ACE American Insurance Company. It's designed to protect MSD from cyber risk due to cybersecurity failures and privacy violations of employee data and customer data. It covers all MSD locations. The insurance covers up to $5 million per occurrence, and the annual cost of this insurance is $31,501. The next insurance is ordinance number 15414. This is the Contractors Pollution Liability Insurance. This insurance is with AIG Specialty Insurance Company. The insurance provides coverage for loss due to pollution condition caused by a contractor hired by MSD with a contract value under $100,000. It covers all MSD location contract sites anywhere. The cost of this insurance is $3 million per pollution liability. Excuse me, not the cost, the coverage. It's $3 million per pollution liability, and also $3 million on emergency response cost. We were able to maintain the same premium as last year on this insurance, and it is $15,276. Questions about the insurance so far? Okay.
This is for contractors with a contract value under 100,000.
Yeah, more or smaller.
What
contract.
happens with 110,000?
Yes, say that again.
What happens with $110,000?
That's just the total cost of it. I mean, might be replacing.
No, I mean, but this policy wouldn't cover a contract of more than 100,000. Is that, am I assuming?
That would fall under our general liability.
Gotcha. Okay.
Great question. Thank you for that. Other questions? Okay, so we're moving on to ordinance number 15143, which is the contractor equipment and inland marine insurance. This insurance was previously with AIG, and now we've found a better rate with Markel Insurance Company. This insurance covers protected equipment when it is lost and it is not on MSD property. The insurance, it will cover the replacement cost of the insurance. On that insurance, we will have the deductible of $2,500 first, but the annual cost of that insurance is $10,850. The next ordinance number is 15408. This is our commercial crime insurance. It was previously with Federal Insurance Company, and now we found a better rate with Travelers Casualty Surety Company of America. This insurance protects MSD from financial losses due to dishonest acts of employees stealing funds and monies, theft, robbery, and money and securities, which again does not happen here. It covers all of our locations. It goes up to $10 million per occurrence, and the annual cost of this insurance is for $58,683. Next ordinance is 15407, which is the fiduciary liability insurance. That insurance is with Federal Chubb Insurance Company. It protects MSD from financial loss due to the mishandling of employee benefit plans by in-house persons in a fiduciary capacity. It covers all of our MSD locations. The insurance coverage is $25 million per occurrence, and the annual cost of this insurance is $112,704. $112,000. I don't know where I got lost. $112,000. Thanks. $704. Questions about that insurance that I want to make $704? Okay, moving on. The next ordinance number is 15406. It is our excess workers' compensation. This insurance was previously with Arch Insurance Company, and again, we were able to find a better rate with Midwest Employers Casualty Company. This insurance covers MSD employees while they're injured on the job. It's for all of our locations. Our employer liability retention is $2 million, and it helps us, and it goes up to $500,000 per occurrence. We have a 2-year guarantee rate on this one, and this insurance actually went down. The cost of the insurance is $298,278 on our workers' comp insurance. The next insurance is ordinance number 15411. It is the sewer backup liability insurance. This insurance is with Zurich. It covers 2 major exposures: liability coverage due to blocked mains, and it also covers the $2,900 of coverage for customers experiencing damages due to overcharges in the system. This covers all MSD locations and MSD systems. This coverage goes up to $1 million per block main, and the annual cost of this insurance is $392,700. The next insurance is ordinance number 15409, and this is for the Missouri Petroleum Storage Tank Insurance. It is covered by Missouri Petroleum Storage Tank Fund. This insurance covers petroleum storage leaks, cleanup costs of those leaks, and any bodily injuries resulting from those leaks. It covers our specific locations where those tanks are located, which is the Bissell Plant, Grand Glaze Plant, Missouri Plant, Grand Glaze Yard, Sulphur Yard, and Minard Yard. The The cost of this insurance premium was able to remain the same, and it is $3,000 annually. The next insurance is ordinance number 15405, is a national insurance program. This insurance we were able to purchase through Selective Insurance Company. It covers building and the contents owned by MSD for damages caused by flood. This insurance will cover an aggregate cost of buildings up to $16,769,800. And the contents within that building, they'll be covered up to $13,314,900. The annual cost of that insurance is $260,000. And the last of the liability insurances is ordinance number 15410, which is the major facility pollution liability. This insurance is with Zurich. It protects MSD from liability claim suits due to losses resulting from pollution, and it also includes the cleanup cost of that pollution. It covers all of our major treatment plants and lagoons. The annual coverage that we receive for this is $10 million per occurrence, and the cost for this insurance is $77,055. Trustees, this takes care of all of the items on item 8. Questions about the liability insurances at this time?
No questions?
Okay.
You want to move on?
So the next item is item 9, which is also my item as well. It's a resolution. Excuse me, it's an ordinance.
Yes. You want to go to 9?
Okay. So this is for changes in the classification plan. Trustees, our classification plan covers job titles and grades of classified positions, and there's going to be some small title changes to a few positions in the departments. Primarily, no one's losing their job. Nobody's lost any employment. Literally, we're just taking titles and kind of updating those titles to make them a little bit more modern titles and more appropriate for the work that those employees are doing. The first one is in the operations department. We have formerly customer care representatives, and their new title will be administrative support representatives. The next one is in the general counsel's office. Previously, the position was referred to as the legal assistant, and based off new assessment, that position will now be called paralegal. In the human resource department, the former title was training and organizational development coordinator, and the revised title for that will now be called instructional designer. In the finance department, we had a former position of assistant buyer, and that position will now just be referred to as buyer. And in that same department, finance, there's going to be the removal of a position called collections representative. Trustees, there's no one in that role at this time. All people in that former role are now called account associates, so we'll be removing that title from the classification plan. What questions do you have about the changes on the proposed ordinance 15401?
I have a question.
Yes.
And it relates to the action taken in December. I'm assuming that was implementation of a new classification plan. Okay, and this is a continuation of that process?
Absolutely.
So Tracy, that was a new classification plan doing updates like we have right now, correct?
That is correct, yes.
So there's no annual redo, update
No, I
of
was
the
just looking at
classification.
how close that date was.
Right, yeah, it was just,
We
we
did this
had,
in 3 months.
what happens when, I think, Tracy, when you collect enough of these, you put them together in a package and we go ahead and execute them for you.
That is correct. And then also, too, just to add additional information, a lot of departments have been restructuring. And so in the part of their restructure, they're finding better titles that will be more suited for these employees' new responsibilities or adjusted ones. And that's where some of this is coming up, but it is not an annual process that we do this.
Well, you indicated that there were no displacements of employees based on this activity.
Typically, when we remove, and great question, sir. Typically, when we remove a title, there's been some concern in the past that there might have been people that have lost their positions because we were removing something, and that is not the case. They just truly have been retitled.
So basically, you did it by attrition.
Yeah. I mean, honestly,
wasn't
yes.
required
Attrition
to
is
do it.
yes.
Well, usually what happens, we've had a title, and sometimes we just don't even use the title anymore, and we finally decide to take it out of the plan, so.
Yeah. Great questions, gentlemen. Any other questions from the other trustees? Okay.
That is, thank you, Tracy. Thank you, Ms. Meyer. The,
You've got one
Well, I have
last
one more. I have agenda item number 9. This is ordinance number 15404
my apologies.
for the compensation plan.
It's on the back page of the last one.
Okay. The compensation plan trustees list the pay ranges, and it also lists our unclassified positions. The changes that we want to make to this ordinance is to give the C schedule the 2% a salary increase on the range of those salaries. That would be the bottom of the salary going up by 2% and the top of the salary range going up by 2% on C schedule. We will know what we're going to do on A, B, and BT after union negotiations have been completed. And then the other thing, we want to make a title change. Previously, the secretary to the executive director was the title that we had as one of our unclassified positions, and now we want to retitle that position to just executive assistant. Questions on the changes that we're proposing to the compensation plan?
How are the new union negotiations going?
That is an awesome question. They were going really well at first, and then due to COVID, there was high concerns about social distancing. So we've decided to postpone those. We're waiting to hear when the unions will feel more comfortable meeting again. But initially, I thought Brett was doing an amazing job, and we were handling a lot of the issues without any problem. Other questions?
Thank you very
Well,
much.
trustees, thank you very much.
Okay, if there are no further questions, I would ask that we move to closed session.
All right, so I'm just, we'll do a roll call vote, so if you don't mind, I'll call the motion. Or is there a motion to move to closed session to discuss personnel, confidential, or privileged matters under RSMO Chapter 610.021, paragraph 3? Yes,
So
okay.
moved.
All right, we'll do a roll call vote. I'm going to start with the phone, okay? Trustee Fair?
Yes.
Trustee Singer?
Yes.
Trustee Wilson?
Yes.
Trustee Yates?
Yes.
All right, we are in closed session.
So if you give us a
So-
minute, we will clear.
I'll entertain a motion to come out of closed session.
So moved. Second.
All in favor?
All in favor? Okay, we're now out of closed session, back into open session. There's no further business. We'd entertain a motion to adjourn. So moved. Second?
Second.
Favor? Meeting's adjourned.
Meeting adjourned.